Main reasons why AMC is still trading in the tens right now is because, well, as for one, the market has been pulling back strongly. This is the worst ever first half of any year for the entire market, for the entire stock market. All right, we are definitely in a bear market territory right now. But coming back to AMC, AMC is part of a lot of funds. A lot of funds have been buying AMC. We can see that when you look at institutional ownership on AMC. One of those is the Russell 2000. A couple of days from now, it's going to be moved from the Russell 2000 to the Russell 1000. That should possibly bring additional buying pressure, but we just never know. All right. Now, because the market has been pulling back based on fears, based on recession, inflation, etc., the market as usually tends to overreact, especially when it turns in the negative. All right. And based on that, AMC was just, part of the whole sell-off downtrend. All right. Now, if you pay close attention to this, whenever the market will rebound, like the market bounced back today, AMC usually will also be in the green, all right? But this is not a pattern. This is not something that is automatic. But I want to bring something to you that definitely will put automatically a huge bounce into AMC stock if by then the short squeeze hasn't happened yet. Because when that happens, this is going to be the biggest, strongest, hardest, most brutal short squeeze possibly we ever seen so far. Why? Because history says the next bull market is just months away. And it could carry the S&P 500 to the 6,000 level, according to Bank of America. Another article here from Forbes says that the S&P 500 crashed 2022. It's almost close to a bottom. We haven't hit a bottom yet, but here comes the bottom. So this is kind of goes along to, with this article because it's coming from Bank of America. And Bank of America is using, historical data performance. They are using exactly how market used to trade going all the way back to the stock market crash in 1987. All right. And they're doing this huge analysis, which brings them to the conclusion that after a bear market, a popular definition of a bear market defines it as a 20% drop from the recent high. As of Thursday of last week, the index was off 23.55% from its record close of 4,796 points on Monday, January 20, 2022. An end typically marks a new beginning, all right? With Bank of America noting the average bull market lasts as much longer, 64 months, with a 198% return. So next bull sees the S&P 500 at 6,000 by February 28th. 6,000 by February 28th. That will put us into 2023. Some people will say, well, I don't know if I need to wait that long. But the thing is, the stock is already in the trash right now. So I don't think it makes sense to sell right now because it just doesn't make sense. Why have you holding so far if you be this close to everything else popping? That's what I think, and I may be wrong. Another indication that they're using is the fact that there is so much fear in the market right now. So much fear. Look, this is a bull and bear indicator. And we are right now sitting at an extreme bearish. Extreme bearish usually signals strong buying. Why? Because if you want to follow one of the biggest investors in the stock market as of date, Warren Buffett, you need to be buying when people are fearing in the market, when there is a lot of fear in the market. And right now there is so much fear, it's just ridiculous, right? But when we finally have indications that this whole inflation thing is not as bad or is trending down, or earnings that are coming for the second quarter of this year are going to definitely show to the market and to the investors that things are not as gloomy as some people think. Because right now everybody is kind of in gloomy doomy mode. Like it's going to be the end of economy. Everything's going to collapse. Why? What is the reason behind it? It's not like we are back in 2008 or even the 70s when, people were just massively losing their jobs and everything. This is not the case. And that's why I think there is a lot of overreaction on this, especially on the negative. But when finally we have some clear indications on the data from a recession and inflation standpoint, definitely the money is going to fly back into companies such as AMC, especially as the fundamentals continue to improve months after months. If I look at the gross revenues on the latest movies out there, we talked about this weeks ago, and we are already at pre-pandemic levels in terms of incomes, in terms of revenue. So it speaks volume for those value investors. It speaks volume to the huge amount of money that is going to possibly come into this play. But ultimately, this can lead to the biggest short squeeze ever, because if the market is going to 6,000 with the S&P 500 as of end of February of next year, according to Bank of America, well, do you imagine what's going to happen to all of the short sellers sitting on every single meme stocks in this play? Do you think they're going to still be able to do whatever they are doing right now? Especially if by then we have payment for order flow completely banned, or we have Apex clearing already done with that alternative marketplace to process retail orders in order to compete with market makers such as Citadel and Virtue. It screams very, very, very bullish signal for me. Personally, I'm willing to wait a little bit longer to have finally the price AMC deserves to be trading at. Not because of fundamentals, not based on, people buying because it's a value stock. No, just because of the short sellers being burned once and for all. That's why I bought. That's why I'm holding. And until I see this happening, I'm not leaving. That's me. All right. So my AMC position is kind of like, I just park it there because I know when the time comes, we're going to all know. Because possibly your bank account is going to look like your phone number, including the zip code.